Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 26, 2024, and we're diving into Leslie's latest earnings report for the fourth quarter and fiscal year 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Leslie's, a leader in the U.S. pool and spa care industry, has just released their financial results, and there's a lot to unpack, especially with their adjusted EPS coming in at 2 cents for the quarter.
Revenue and profitability overview. Let's start with the top line. Leslie's reported sales of $397.9 million for the fourth quarter, which is an 8% decrease compared to the previous year. John, can you elaborate on the factors affecting their revenue and profitability?
Absolutely. The decline in sales is primarily due to decreased store traffic and a drop in larger ticket and discretionary categories. Despite this, Leslie's managed to maintain a gross margin of 36.0%, although it was slightly down from last year. The net loss of $9.9 million reflects the challenges they faced, including a one-time contract item that impacted profitability.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 10 cents for Leslie's, but the actual adjusted EPS came in at 2 cents. What does this discrepancy tell us about the company's performance and market expectations?
This significant miss indicates that the market had higher expectations for Leslie's ability to manage costs and drive sales. The adjusted EPS of 2 cents suggests that while they are controlling SG&A expenses, the sales decline and specific one-time costs have weighed heavily on their earnings.
Operational efficiencies and future outlook. John, Leslie's CEO, Jason McDonnell, mentioned a focus on customer-centric strategies. How do you see this playing out in their operational efficiencies and future outlook?
Leslie's has been disciplined in managing their SG&A expenses, which decreased by 4% to $160.8 million. The CEO's emphasis on a customer-centric approach is promising, as it aims to leverage their strong brand and market position to drive long-term growth. This strategy could help them navigate the current market dynamics and improve profitability.
Balance sheet and cash flow analysis. Turning to the balance sheet, Leslie's reported a significant increase in cash and cash equivalents to $108.5 million. What are the key takeaways from their cash flow and debt management?
The increase in cash is a positive sign, driven by a substantial reduction in inventory by $77.5 million. Net cash from operations was strong at $107.5 million, indicating effective working capital management. However, their funded debt remains high at $783.7 million, which is a concern that needs to be addressed moving forward.
Key takeaways. In summary, Leslie's faced a challenging fiscal year 2024 with sales of $1,330 million and a net loss of $23.4 million. Despite these hurdles, they showed resilience in cash flow management. John, what are your final thoughts on Leslie's investment prospects?
Leslie's is navigating a tough market environment, but their focus on operational efficiencies and a customer-centric strategy could position them well for future growth. Investors should watch how they manage their debt and execute their strategic initiatives. Thank you for having me.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Leslie's performance in the comments below.